right, let's take a look and see what these markets are doing. The follow on from Christina's 90-day outlook. It looks like the Southeast is going to get some decent coverage. Let's take a look and see what we've got going on in corn. 1.5 cents lower there in July to 4.57 even, and we're only about 5 cents off the high there, and 2 3/4 cents off the low. We've just come back a little bit, but this board's been down about a couple cents all day long. Dees is down 1.5 cents to 4.79 3/4. Moving over to the beans. Well, July is down 18 1/4 cents to 12.09 1/2. That's one tick off the low of the day. And that's what I was afraid of, because if you go out on to November, and we've just ticked back up, but we're 13 cents lower there. We're right at that $12 line. We'll see if we can defend that all day today, but we're 3/4 cent off the low of the day, which is 11.99 1/4, and boy, the high is 19.5 cents away. All right, that's beans. Let's move on to the Chicago wheat market. That's a little bit better, 2 3/4 cents better in the July to 6.36 3/4. We're about 5 1/4 cents off the low of the day, and now we're about 10.5 cents off the high. So that's what we've got going on in July. You go out to the Dees, 2 cents better there to 6.82 1/2, and that's 9.5 cents off the high, and about 4 1/4 cents off the low. All right, how about the hard red in Kansas City? That's up 3 3/4 cents. We've kind of settled back in here, folks. July is up to 6.52 1/4. July hard red, Kansas City, 6.52 1/4. Now 6.52 1/2, up 4 cents on the day. But if you look, we see we're about 6 cents off the low of the day, and well off the highs by about 12.5 cents. Dees is up 3 3/4 cents, 6.86 1/2 last there, 5.5 cents higher off the lows. But we've got the highs are about 12 cents ago, right? 11 3/4 cents ago. So that'll give you an idea about the hard red. Spring wheat in Minneapolis, that's up 3.5 cents to 7.06 1/4. Well off the lows by about 7 cents, 6.5 cents. We move out to the Dees, that's up 3.5 cents to 7.26 1/2. All right, moving over to the cotton, and we'll get to our guest analyst. 107 points lower there in that July contract to 78.99, and March, and I'll go to the Dees. Sorry, that's off 114 points to 76.56. Let's bring him in, the venerable Tommy Grisafi with Advanced Trading. Tommy, thanks for showing up on the show. All right, what are your thoughts here? What do you got going on?
I'm just waiting for my turn to talk between Christina and you. I'm like, I don't even know if they're going to put the camera on me or something. Great show. Listen, I'm liking the price action. Bullish, bearish, whatever. When we just start to trend really hard, it gives the farmer this feeling that we could never go down again. And we can. Look at this bean. I have some bean charts up here in November here. We were just trading 12.28 the other day, and we're right at $12. These were hedgeable levels. These were sellable levels. These were protectable levels. And this is why, Scott, for you home gamers out there, we have crop insurance that was established in February. And as you all know, watching the show, the grains hit really low levels for the month of February. And then we rocket out of those Feb lows, like so many of Scott's guests have suggested we might do. We get the weather event. We get the problem in South America. We get the frost and not enough rain in Russia. Then we get these levels. There's a gap between your crop insurance and the market. That gap needs to be covered. And so we like to make some cash sales and raise those floors on those puts, or even establish a put. We had 3 people call yesterday to open an account and say, hey, I got to get these soybeans protected. Now you move it over to corn, same thing, just dealing with a lot more bushels. Usually for every 1 bushel of beans someone grows, they grow 3 or 4 times as many corn. So a lot of corn bushels need to get protected. People aren't as excited about the price, but it needs to be protected. Same thing goes for wheat. And with that, we probably got to take a break for station identification, and we'll come back to you and talk cattle on the way out.
Your internal clock's a little off.
Keep going. Let's go.
I was going to ask you one more question.
More.
Yeah, but wait, there's more. Commitment of traders, going to look at that tomorrow, right? That'll give you some insights about what's been happening with the Feds, the funds, right?
Yes, sir. But it's behind. It's behind. The data's always behind, and so you got to use a little more cow sense to keep track of that data. We don't have the pits anymore, as you know, and it's hard to tell who's moving and shaking. I can't rely too much on COT. I like price action. If there's a USDA report, I don't care what they say. I care how the market closed.
Yeah.
Now we're taking a break.
All right. Well, David just agreed with you in my ear, so we'll do that. You've bullied him enough.
David and the whole third floor crew, I said hi. That's what runs the show. It's not you. Just sit there and
All right. That's enough. That's enough. All right. We're going to go away. We're going to pay some bills before Tommy ruins it for everybody. We'll be right back after this. All right, welcome back. Let's talk about some livestock here real quick, and we'll get back to our guest analyst who's raring to go. Let's talk about live cattle. I've got that board up, and that's just a little bit easier here, folks, today. Not a lot going on. Very quiet trade. June's down 37 cents to 176.10. You've got a D's board down 65 cents to 180.97, and that's about what? 52 cents off the high of the day. There you go. That's live cattle for us. Just steady a little bit easier. Let's go to the feeders. They, too, have come back a little bit, but we're still just a little bit to the downside. 87 cents lower in August. 251.52 is last there, and you go out to the October. That's down 87 cents to 253.27. Lean hogs, I think they were lower the last time we visited. They still are 85 cents lower in June to 97.87. And we've had an okay range over there by just over $1. And then you've got an August board that's down 95 cents to 100, spot 77. All right, let's bring him back on. Tommy Grisafi, Advanced Trading of Valparaiso, Indiana. Here we go. Buckle up. Tommy,
Wind them up. Let's go.
Yeah.
Listen, when I was sitting in your seat trying to be Cow Guy Jr., hogs were trading 107, 108 in June's, and those have come way off. When we as brokers, when we suggest these are hedgeable, or as Carly Garner did such a good job of explaining a position to put on, because I was hosting the show and Carly was the guest, she's like, we're doing this in hogs. We're not trying to hurt people. We're trying to help people. We're trying to protect higher prices. For some reason, in the commodity markets, we just never stay at high prices long enough. We stay high enough to blow you out, make you make 3 margin calls, and make your life miserable. And then we come back down. Look at coffee. Look at cocoa. Look at the history of grains. Look at the history of any commodity market. And technology and innovation will always trump the price. We will always produce more with less as time goes on. Back to you, my friend.
To that point, 1930s, our average bushels per acre for corn, 30 bushels an acre. Now that acre, that size of that acre hasn't changed, but we're gonna, some guys are doing well over 200. The national average is what, about $1.80. So, I mean,
181.
Yeah, that's a good example of how things have changed. And we used to say it all the time when we traded in the pits that if you keep having these hybrids outperform, it just turns corn and beans into like the most inflation-proof products out there, because you just keep producing more and more from the same parcel. That ultimately is deflationary. It's not inflationary, right? So that's one of the downsides of being really good at it and maximizing and being very, very efficient is you've got so much more production from the same piece of ground, and the prices don't go as high as you'd like, right?
Absolutely. Scotty, you've been a great guest. I'll see you next week on the show.
This is amazing. All right, well, you need to get a haircut and maybe put a tie on, but, and then we'll have you on. But thanks for that anyway, Tommy. Tommy Grisafi, Advanced Trading, Valparaiso, Indiana. We'll bring it back here to Suzanne.
I don't know. I'll have what he's having.
Yeah, right. No kidding.
We love him. Thank you, Tommy. Thank you, Scott.